Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Gold's recent volatility is masking a deeper structural shift in precious metals valuation. The yellow metal settled near $4,511 per ounce, posting a modest 4.1% gain year-to-date. Yet, this figure obscures a staggering 19.3% drawdown from its January 29 high. Analysts warn that cognitive bias is distorting current pricing models. Investors are fixated on short-term noise rather than the long-term trajectory toward 2026. The disconnect between spot price and fundamental value suggests a significant repricing event is imminent. Meanwhile, the energy sector faces acute geopolitical risks. Equinor has issued a stark warning regarding Europe's natural gas supply. The Norwegian energy giant predicts a critical shortfall if disruptions in the Strait of Hormuz persist for 1 to 3 months. Storage levels across the continent are already critically low. This supply vulnerability exposes European industrial consumers to extreme price spikes. The risk is no longer theoretical. It is an immediate operational threat to regional stability. On the macro front, the war economy narrative is being dismantled by hard data. Swedish intelligence has released an analysis of nighttime luminosity that contradicts Kremlin claims of robust growth. The data reveals Russia's economy contracted by 8% between 2020 and 2024. Moscow has publicly asserted a 13% GDP expansion. The discrepancy highlights the limits of state-controlled economic reporting. The luminosity data serves as an independent, verifiable metric of industrial activity. It suggests the Russian war machine is consuming capital faster than it can generate output. In related news, corporate governance remains a point of contention in the digital asset space. Nakamoto Incorporated reported a massive $238 million loss in the first quarter. The company also executed a 58% dilution of its equity base. Investors are questioning the strategic logic behind retaining a chief medical officer on the payroll. This is a Bitcoin treasury firm, not a biotech startup. The move raises serious questions about Nasdaq compliance and executive alignment. The dilution erodes shareholder value while the operational focus remains ambiguous. Looking ahead to today's release, traders should monitor the Chicago Fed National Activity Index. This medium importance indicator drops at 12:30 Universal Time Coordinated. The previous reading stood at -0.20. Any deviation from this baseline will influence short-term rate expectations. Additionally, keep an eye on Mexico's balance of trade at 12 o'clock Universal Time Coordinated. The previous figure was $5.932 billion. These data points will provide immediate context for emerging market flows. Finally, earnings season approaches with LexinFintech set to report on Monday, May 24. Key metrics to watch include loan volume and net interest margin. Shifting credit conditions will dictate the stock's direction. The broader fintech sector is sensitive to these margin pressures. Investors must assess whether the company can maintain profitability amid tightening credit standards. That's your market briefing. Follow Rumour with AI for daily market intelligence.